One of my friends once said, I don't trust stocks. I want to invest in something solid, like gold. I said to them, hey, but did you know you can invest in gold, silver, and other materials actually via the stock market as well? Hi guys, welcome to 10-Minute Investing. My name is Bojana. I live in Chicago. I have been investing for the past 3 years. So far I have invested $46,000 across 3 different portfolios, and I explain investing on this channel and how I invest. So if you're interested in that, please subscribe. Share this video with a friend, add it to your, watch later list, and keep watching. First of all, why should you consider even, buying gold in a virtual way rather than having an actual physical gold bar or gold jewelry? Let's talk about it. First of all, if you ever had to buy golden jewelry or golden bars, there is like sales tax. You have to pay for insurance because that gold has to be stored somewhere, shipping, like delivery, so you have to be paying for that. Probably some intermediary or like a dealer that you also have to pay commission to get the gold. That adds up over time, and the more you invest in physical gold, the more those costs will add up. And because it's physical, you will be just stressed out because you have to know where it sits, how much of it is there, is it insured, what happens if someone breaks in and stuff.
Wait.
My earring's gone!
Are you
Oh my god, I'm gonna cry! My diabetes.
So it's a lot of hassle. It costs you mentally and it costs you money-wise because you have to pay for it. Physical gold is just less liquid as well, right? So you have to, if you want it to exchange it for money, you have to go and find a buyer or a dealer or somebody who wants to buy it. You cannot instantly get it transferred, get cash for it. And on the stock market, like if you sell it, the money goes straight into your account in like seconds if you sell a gold ETF, and you can withdraw it and get it very next day, right? So it's much better to invest in a gold ETF via the stock market than hold gold in large quantities somewhere. That might be problematic, to say the least. Okay, you understand that it's better to buy gold via the stock market, but how much return can you expect from gold? Honestly, gold is not really like your hottest stock. Nobody talks about gold as much as people talk about Nvidia these days, but gold has been known as a good hedge against inflation. So like when money loses its value over time due to inflation, a gold is kind of like a similar instrument to a high savings account or a bond because it gives just enough return to cover that like loss of value due to inflation. However, in the recent years, considering the recent years like surge in gold value over the past few years, the annual average return was actually pretty high. I found this source that says return of gold over the last 25, 20, 15, 10, and 5 years has been from 7 to 13%. That's great. That's actually in some cases higher than S&P returns, right? S&P 500. Also, last 10 years, gold averaged 12% annual return. And since 1971, so basically 50-ish, 54 years, gold averaged again about 10% per year. Now I have this graph here, and you can actually look at this graph in more detail. I will leave the link in the description. It opens this huge spreadsheet, and you can see year by year. I took last 20 years, so from 2004 to 2024. Gold return has been very different in all these different years. Like you can see 2013, gold fell to like by 27%. Wow, that's rough. Last year, 2024, look at it, 26% return. So right, it's kind of, I would even say it's kind of volatile if you look at these years and these numbers. But overall, what you have to know about it, it's not going to be like a 50% return like a stock could probably give you, depending on what stock, of course, but still. You can expect really decent return from gold, but you cannot expect it to be, the reason why you become a millionaire or something. That is not the reason to hold gold in your portfolio. You want to hold gold when currencies lose their value, like dollar value right now, it's very volatile. Nobody knows what's going to be happening to dollar once tariffs fully kick in or interest rates change. So gold might be a good, thing to invest right now if you don't want to risk too much, but you still want to have money invested and guarantee you some return. Moving on to what is the most convenient way to invest in gold? I kind of already mentioned it. It's through the exchange traded fund ETF. You have already seen probably these three most popular gold ETFs. There is GLD, there is IAU and IAUM. Now I own the last two. I don't have GLD. GLD is like one of the earliest ETFs. Like it has been available to investors for much longer than IAU, which is more recent. The most recent is IAUM, and you can see that I sort of made this comparison in ChatGPT of all their metrics, and IAUM has the smallest assets under management number, but it has much lower expense ratio. So basically, if you want to protect yourself from any potential loss in gold value, you want to go for AUM. Even though it's a much smaller fund, you will also pay less in the expense ratio fee to the fund issuer. So that is the reason to own that one. And with GLD, first of all, how is GLD and IAU different? Except for issuers and the assets under management. Obviously, GLD is the older one, it's bigger. But when you're buying GLD, here's what I found. You're paying for a bigger ounce of gold. So you're kind of like, I don't know, you're buying more gold within one ETF or GLD compared to when you're buying IAU, because that is 0.10 ounce and 0.01. So basically, if you want to buy more gold and you're ready to pay more higher expense ratio and you're kind of ready to take on more risk, go for a GLD. But a lot of small investors, retail investors like me, they go for either IAUM or IAU. And honestly, also my returns on gold so far are 16% on IAU and 1.5% on IAUM. 16% especially, I'm very glad. I have only recently purchased IAUM, so that's why the return is not very high. But I think it has potential to grow further if there is gonna be a lot of like uncertainty in the market in the coming year or years. How do you evaluate gold ETF? Let's say you don't want to just pick these ones, but you want to explore more. Maybe you want to explore silver or other metals. You can go to ETF.com screener, and in the classification, you want to check for commodities, and here's the screenshot. You want to do precious metals and you want to pick gold, right? And you will see all of them here. And once you click on each ETF, you will see all the metrics, like all more detailed metrics. And I have made, by the way, a very detailed video that explains how to analyze ETFs, so please give it a watch. Key metrics to track, again, as I mentioned, expense ratio, that's the fee that is kind of paid out of whatever portion of return you have. If you don't have return on the ETF, then that's the price you are kind of paying from your own investment. So keep in mind that it needs to be low. The lower it is, the better. Assets under management, the higher the number, that's better liquidity, lower trading costs. And issuer, you want State Street, BlackRock, Vanguard, Invesco. So a lot of these big names, you want them. They're considered kind of like the biggest, the best, the most prominent issuers of ETFs, fund managers. So I would stick with those. But again, you know, trust your own gut and make your own analysis, make your own decision. So this is it. Tell me in the comments, have I persuaded you that it is the right decision to start investing in ETFs? And if so, what ETFs are you going to invest in? I would love to know. And if this was useful, please subscribe or leave a comment, share with a friend, and please don't wait. Start investing today. See you soon. Bye.